We see a picture that is painted by the press, North American press, UK press, of Venezuela being in a state of disorganization, chaos, and obviously new government looking to come in when they finally make that decision. For you as South Americans, is the picture clearer or?
It's a lot more clear than people. I mean, it's still very challenging, but a solution has to come in because the country has gone in a spiral that has no bottom. Eventually, there will be an opening and an agreement. We, as a company, have an investment of $110 million in a project that is, it's called Lo Increíble A and B. It was part of our assets. We were ready to build a facility in a mine. It's got 4 million ounces of gold in place, open pittable. The reason that it's still intact because it's low grade, so we're talking about 2.5 grams. Legal miners don't go mine those kind of grades. So we believe that it's an asset that will be easy to recover. That's why we announced that we were going to do a spin-off of our company of Gran Colombia, financed partially by Gran Colombia and other investors.
Right.
And that's going to be done in the next 60 days.
Right.
We're going to put our asset over there, waiting for a change or waiting for us to have an opportunity. It's a very, very inexpensive project. When we left it in 2012, that the government started talking about nationalization, this project was ready to work on, it was $250 an ounce cost of production, all-in sustainable
All in
cost.
sustainable, yeah.
It's going to be a very profitable project, but we'll see. We'll see things.
Interesting. So let's come back to what you've got today. Just want to talk about some of the numbers, but around the company. So you've very few shares out, very tightly held.
Correct.
Yeah. So how much does management got?
Management is somewhere around 19 to 20%. Depends if you look at the warrants also. 22 probably with the warrants.
Okay, fully diluted, right? Okay.
Yeah.
And I guess that a lot of it's sitting in institutional, just the way that you structure this.
I would say the rest, outside of us, probably another 50% in institution, and the rest retail.
Okay, so meaningful retail. Because the retail component is obviously what kind of tends to move these things in terms of the liquidity.
Yes, and the problem is that when we actually were a lot tighter than that. We had 21 million shares about a year and a half ago.
Okay, but
we issued what we did. We got rid of some of the debt of a silver note, and we converted it. Most of it, a lot of it was our management and the same institutional investors. We felt that at the time with stock at $2.20. It was a good idea to convert and create some liquidity in the stock because it has zero liquidity. Unfortunately, it backfired on us. Everybody converted. The stock went to 350 and then went to 450, and it's now in the 360 range.
Yeah.
And nobody wants to sell.
Yeah, that's the thing.
We're back to the same, but we're very happy with what we have.
Yeah, I mean, you're throwing off cash and you're paying down debt, which is great.
Well, the company is putting out a lot of cash. We're sitting right now, end of July, we're going to be sitting with $50 million US in cash. We already paid $15 million in taxes, so we have no taxes until next year.
Okay, so I mean, talk to me about that. So you've got till 2023, but it looks like you're going to pay in terms of the debt, current note. But you're going to pay that down probably quicker than that. You've got $50 million. Is that all going towards paying down the debt, or is there going to be any dividends, any cash buybacks?
For the next few
share buybacks. Sorry.
No, for the next year or so, I'm not a big fan of shares buyback. Share buyback has to be done at the right time. You buy shares when you are in a position that you say, all right, our excess cash is so much that we might as well. But if I take liquidity out of the stock, it gets even worse. It's going to be a much more liquid stock.
That's true. That's a good point.
So what are we going to do with the cash? The cash is going to stay in the bank. as a security. You never know what happens with prices of gold and with commodities. So
Mm-hmm.
we're very comfortable building up a good cash position.
So you've got physical gold secured.
Correct. And
You've
we
got
have
cash. So you've got lots of options.
We got lots of options. The other thing is we only use to repay, we own $69 million as of last month.
Right.
By July, we're going to be down to almost 59, I believe, that it's going to be.
Right.
The $59 million that it's owned only represents 7% of our production a year to repay that.
So less than the 10 in here, right?
So
Okay, so
it's insignificant.
Yeah.
So we rather go to the process of repaying that debt. The new bond that we're planning to do is gonna be done strictly not on the corporate level. It's gonna be done on the project level. So
okay. So to that point, with this bond taken up predominantly by institutions last time, we just talked about liquidity as a thing which is important for companies of your size, right? So is some of that bond going to be opened up to the retail market?
Yes, it would have to be a very specialized retail market, but yes, we would.
Okay.
But unfortunately, with some of these bonds, because it becomes complicated, especially when you go into a monthly interest payments and things like that, you want to limit to maybe $200,000-300,000 minimum investment, and that's what makes it difficult sometimes for the retail public to put in, because even the exchange puts a limit.
Yeah, for sure. Well, whether or not it's through the bond or whether it's through another mechanism to allow retail to get hold of more shares.
Correct, but you know what's interesting? After we issued, our bond is publicly listed. Retail has come into the bond and bought in small amount.
Okay.
Initially, you have to go and buy a certain amount. I think it's a 200,000 minimum that the exchange gives you.
Right.
But after that, once it's listed, it becomes an instrument. I know people that have bought 20,000, 30,000 of the bond, 10,000.
Your balance sheet. I mean, some of these things you've touched upon here in terms of the pay down of the debt. Your EBITDA from 2015 to today is literally that's a nice chart.
It's a fantastic little chart.
Yeah,
we're very happy with it.
Right.
What we're not happy is with the price of the stock.
Just don't tell me you're undervalued.
No,
everyone tells me.
Everybody says that.
But tell me, okay, you've had this kind of very fast, rapid ascension to where you are today in the EBITDA. What's next? What builds it up? I know you've got to develop the second asset, but is there more M&A planned, or is it a case of focus on these other exploration assets that you've got? How do you keep that projection?
Yeah, well, obviously the Marmato project is going to be significant because we just doubled our production. We already started the path of the M&A. We're looking at new areas in Colombia. There is the.
So you're comfortable in Colombia.
We're very comfortable.
And you're able to find good assets. You're able to assess good assets.
There's still very big amount of assets to be discovered there. But as part of our plan, obviously the next step is we already started with Sand Spring by taking a 19% position in Sand Spring. We believe it's a good jurisdiction.
That's a non-operational position, right?
It's non-operational, but we are giving some directions to management on how to proceed to build it through the experience of our management team.
And I assume that's the same with the IM Gold situation, potentially.
IM Gold, we probably will end up with about a 40% of the carry position into the company.
And they would operate?
And they would operate.
So is this the picture you're building? Is this the way forward in terms of your M&A? You bring in joint venture operating partners? Or is it...
In these two cases, it would be that, but we are opening ourselves to look at operations, to go and expand our operation, possibly Venezuela, possibly other South America. Our focus is always going to be in South America because that's where we operate, we know best.
Right, okay. So anyone wanting to understand the finances a bit, page 7 of the current presentation.
You're not going to find us in Africa, that I can tell you.
Okay. We use a phrase over here, so you stick to your knitting. You stick with what you know. Okay, so which is great. Okay, let's continue talking about some of the results here. I'm looking at page 9 of the presentation. In terms of your production, you're saying you're going to potentially to go from 225 up to 400 a year by the end of
2023.
2023. Okay, so that's with the kind of ASIC which you're looking at, that should be generating a lot of cash. So what's the end game here? Is this just a cash cow? We're going to keep running it? Or do we sell it?
At that point, that's when the decision's got to come in. One decision that we made is we were looking at one point for strategic investors, strategic partners to grow. People came to look at us to see because they were very intrigued with our growth and everything. Our decision now is, instead of being acquired, I mean, if somebody comes, we're a publicly held company, somebody gives us the right offer that it's good for our investors, we're there to see it, and if it makes sense.
Yeah.
We're not here because we need a job, we're here because we want to make money. So if that happens, but right now the strategy that we've taken in the next few years, it's going to be growth and eventually acquisition of other properties, and we are very much considering at one point when we feel comfortable the next few years a dividend payment, because this is going to be putting a lot of money out.
Right. You use a phrase in your presentation, just going to finish off using a phrase, so stay disciplined. Now, you're a businessman with lots of interests outside of mining. So how are you going to maintain discipline for this company?
The discipline comes from the management team. That's why my partner and I choose always to be in the chairman position, and although we are executive, we look at the big picture. We bring good management, strong management that have the capability of executing, and when we see that the execution gets a little bit wild, we have the strength and we have the position in the company to come back and bring everybody to earth.
And move quickly.
And move very quickly.